What's up, Money Minds, and welcome back to Market Briefs Video Edition. Today is November 10th, and here's some business and financial news you can finally use. Yes, in case you were wondering, earnings season is still going on. Strong earning results have supported stocks and helped them to get to brand new highs. But it looks like things are starting to wind down. 459 companies within the S&P 500 have reported earnings so far, and around 81% of them have beat their earning estimates. Disney, Tencent, and Adidas all report today. Next up in our November 9th market recap, it was a strange day for major indexes on Wall Street, as most of them fell into the red for the first time in a while. The S&P 500 had its first losing day in about 9 trading sessions, as some investors decided to take profits after a huge October rally. And this is of course all ahead of some very key inflation data. Infrastructure stocks continue to be the spotlight of Wall Street after the bill was passed just a few days ago. In our first main story of the day today, we're going to be talking all about GE and how the company is splitting up. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. One of the biggest conglomerates in the US is breaking into 3 separate parts. General Electric announced the divide yesterday, a move that will help the company refocus into specific new sections. The 3 sections are aviation, healthcare, and energy. All 3 of these new companies will eventually go public as separate entities. And shares of General Electric popped by around 2.55% on the news. GE's stock is up by around 55% over the last 12 months after underperforming for the last few years. General Electric has been around for a very long time. It was founded in the 1800s by Thomas Edison and has seen a ton of transformations as the US economy and world has changed. But this move does make a lot of sense for GE as the world is beginning to change again. They're making moves in order to stay afloat. Next up, let's take a quick break to talk about today's sponsor, Fundrise. Do you want to invest in real estate but do not want to have the hassle of dealing with tenants? Well, Fundrise makes it easy, and when you invest with them, you unlock a brand new world of real estate investing without dealing with tenants or the upfront capital. What's even better is you can start investing with as little as $500 and get a ton of exposure to real estate all throughout the country, and they will even pay you with passive income. That means when you invest with Fundrise, you're investing according to your investing goals. In addition, you'll get paid with quarterly dividends, and your money will be invested into multiple properties all throughout the country instead of just one. And Fundrise even has a historical return rate of around 8.7 to 12.4%, so there is a lot of room to grow here. Wealthy people build their wealth by investing in real estate. And now with the help of Fundrise, you can too. And for whatever reason, if you are not happy with your investment, Fundrise will buy it back from you within the first 90 days. So if you want to learn more about Fundrise and start investing with them, I'll leave a link in the description below on exactly how you can find them. Big shout out to Fundrise for sponsoring this video. And now, back to the news. Panera Brands, the owner of Panera Bread, Caribou Coffee, and Einstein Bros, is planning on going public again. The company was previously listed on the New York Stock Exchange for 25 years, all the way up through 2017, but was taken off when it was bought out by JAB in that same year for around $7 billion. Although the company hasn't worked out any details yet, like the price of its IPO, when it will actually launch, and how many shares will be available, it already has a key investment from Danny Myers within his SPAC. And once the deal is finalized, Myers will become the lead director on Panera's board. Many other restaurants have also decided that they want to get a slice of Wall Street too this year. They've either gone public or are planning to sometime this year. Some of those companies include Dutch Bros Coffee, Krispy Kreme, and First Watch Restaurant Group. Next up, shoppers are trying to get their holiday shopping done early this year, but they are running into an all too familiar fate in this pandemic era. Nothing is in stock. In October, consumer online spending reached around $72.8 billion. That's an 8% increase from this time last year. And of course, with that, some out-of-stock messages have started to pop up too. There were around 2 billion out-of-stock messages in October alone. That is a 250% increase from January of this year and a 350% increase from 2019. Electronics is the sector that is struggling the most to keep items in stock, followed by jewelry, apparel, and pet products. And analysts warn that supply issues are only going to get worse as the holidays creep closer. Next up in our Pick Your Brain section, you will be able to pay with your purchases on Amazon with Venmo starting in 2022. Venmo's parent company, PayPal, announced the partnership during its earnings call yesterday. At the moment, Amazon does not accept PayPal, but it looks like it might soon accept its little brother. Next up is our Money Mind section, where we pull comments directly from you all on our Instagram, YouTube, and TikTok accounts. This next comment comes from Urino1970 on our YouTube channel, and the comment reads, "I am really loving this channel. Always great info and always up to date." Thank you so much for that comment. I really appreciate it. We are putting out videos every single day on all of the top business and financial news topics from around the country. So if you like this video and you want to check out our others, be sure to subscribe and hit that bell below. That way you can see all of our new videos the second they drop. Thank you so much for the comment again, and if you want a chance to have your comment read on this daily Market Briefs breakdown, join the conversation and leave a comment below before you go. Next up in our Mind Break section, yesterday was all about space plumbers. Today, space ketchup. Heinz recently collaborated with around 14 astrobiologists in order to grow tomatoes in simulated Martian soil. It successfully grew a crop of Heinz tomatoes with, and I quote, "the exact qualities that pass the rigorous standards to become Heinz ketchup." That is all according to the company. I kind of want to know what those standards are. And you're probably wondering, what's the point? Well, marketing. In today's world, viral marketing campaigns are some of the top pocket stuffers for companies. If you go viral, you got a good chance of becoming a meme, and that is typically a good thing for companies. And we're just comforted to know that it is possible to grow crops with simulated Martian soil. Money Minds, we are nearing the end of today's Market Briefs newsletter, but here's a few companies that trended up and a few that trended down yesterday. Shares of General Electric jumped after the company announced its future plans. Roblox, the online gaming platform, soared after it reported a massive earnings beat and saw its revenue increase by around 102%. And the Real skyrocketed after a better than expected earnings report. And trending down this week is PayPal. PayPal had one of its worst days in almost 2 years after the company reported worse than expected earnings and a weaker than expected revenue forecast. Tesla dropped for the second straight day yesterday after a series of Elon tweets about selling off his stock. And finally, Smile Direct Club dropped by around 20% yesterday after it reported worse than expected sales during Q3. But that is it for today's business and financial news. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, Money Minds, and I'll see you all in the next one.